Good morning, everyone, and welcome to the morning market review. It is Tuesday, it's the 31st of October. My name is Russell Sharma, Senior Market Specialist at FXCM, and I'll just draw your attention to my email address, which is rshaw@fxcm.com. And of course, if you want to correspond, that's the email address to use. Just going to go ahead and bring up our disclaimer, and we'll start off with the high risk investment warning. Good morning, Michael, Mia, Katie, James. Good morning to you all. It's a pleasure to have you on the webinar as always. Thank you everyone for signing in and joining this morning. It's very much appreciated. Hey Raj, good morning to you. I'm just going to go ahead and bring up our market commentaries disclaimer. Hey Kim, pleasure to have you on the webinar as always. All right, and our references, MarketScope 2.0 and TradingView. Here is our trading view, starting off with the real rate. Now, actually, I think it might be instructive if we take a look at the US dollar before we look at the real rate. I want to just clear up all the line studies that we have here. Let's just click there. Let's take out these lines. Let's take out the labels. We'll keep a rectangle. Okay, so the RSI will keep in just to indicate that it's above 50 and that there's an underlying bullish momentum. There's also, of course, the fact that the dollar candlesticks are above that 30-week exponential moving average, and the 30-week exponential moving average is moving in an upwards direction. So, of course, there are bullish signs here that we can see. What is interesting, of course, is the price action of the dollar over the last 1, 2, 3, 4, the last 5 weeks. The last 5 weeks, sure, there's been volatility, but in effect, we've moved sideways, haven't we? So we've gone sort of laterally, almost as if the dollar is suggesting some sort of interim top. And we haven't pulled back so much, but we haven't gone up either. And I think if we take a look at the real rate here, I think we do have a clue to what's going on. Actually, in the RSI, there is a signal on the RSI. It's not one that we point to all that often, but I think in of itself, it's a fairly powerful signal, and it's called a failure swing. And effectively, take a look here. What we have, what a failure swing is in the RSI, is when we have, I'm going to just put in P for peak. Okay, so we've got a peak, then we've got the trough just over there. I'm just going to move that there, that's fine. Then once we the peak, the reference peak trough in the RSI, you have here the lower peak, and then up by the overbought, it makes the lower trough. That's what's called a failure swing in terms of the RSI. It's kind of another way to see it is a negative divergence. But I remember specifically when I sort of learned the theory on RSI, failure swing was specifically mentioned. So we've got this kind of failure swing that is taking place, which perhaps suggests also that there is a top in the real yield. And we've been mentioning this for quite some time now, in that, well, how high can the real yield actually go from here? And I'm of the opinion we must be pretty close to the apex. If we haven't hit the apex, we must be pretty close to the apex. And the real yield over the last 5 weeks, guess what? Well, it's sort of moving sideways. It's sort of a slight jump last week that where it pushed up, but large real yield moving sideways. And the fact that with this failure swing in the RSI, well, I wonder if that is suggesting to us that the yield may be coming down. What's a way for us to keep an eye on this? We go back to IEF. Remember, IEF, it's an exchange traded funds. It's looking at the prices of the 7 to 10 year bonds. Prices are inversely related to yield. We have looked at that in terms of the running yield. We also do have a bond webinar, which if you'd like, just email me and I can email you links to it. But as the price moves up, the yield to maturity generally comes down. As the price of bonds moves down, the yield to maturity generally goes up. Well, we've got this failure swing. It's suggesting perhaps the yield coming down. Well, if the yield's coming down, then we want to see if prices are going to be moving upwards. And what we can do is we can go through to the IEF. Okay, well, it's just a treasury bond ETF for the 7 to 10 year. Let's just bring that up. And what we basically looking for here is some sort of support. We don't quite have the bullishness reflected in the trend following indicators. Perhaps I'm not a great user of divergences. There is a positive divergence here, perhaps suggesting that we are at the nadir of the IEF. I'd like to see more positivity in terms of the price action. What we can do, so I've taken out the RSI. What we can do is take a look at this on a monthly scale, and let me just see if there's some support here. Raj, you don't have to attend, just send me an email. We did the bonds webinar a few years back. I can send you the link to the recording. Katie, just which chart did you want to look on the monthly? Just was that the real yield that you wanted to look? Let's just take a look at the IEF on the monthly. Okay, so here we've gone on the IEF. Just an indicator that I want to throw in on the IEF is the COPOC. We'll take a look at real yield as well. Absolutely. All right, we'll take but let's just throw in the COPOC here on the IEF. The COPOC to me is a terrific indicator. I utilize it when specifically looking for that panic selling stage moving into the renewed confidence stage. In other words, well, if we come to the end of a bear market, what comes next after the end of the bear market? Well, the beginning of a bull market, that's called the renewed confidence stage. There is certainly a bear market when it comes to bonds. I'm just going to put the 0 in. Let's just put the 0 in here. And typically when the COPOC turns up from under 0, you potentially have some value there. This was a early signal. It comes here. Here's a good signal, and it moves. The bonds price move up there. This is a good signal over here. Going back to June 2010, moves up there. What's happening currently is we do have the COPOC indicator has turned up from below 0. It looks again as if it's a early signal, but if we get something like this, if we get a movement that kind of goes like this, something like that, and then moving up again, something like that, we could be pretty close to the next leg up. If we get the next leg up in terms of bond prices, then we probably have the apex in the in the bond yields. Katie's asking to take a look at the monthly on the real yield. I think that's going to be informative. So let's just go through to back to the real yield. So we just go US 10-year minus the break even, right? Which gives you, it's effectively what you're looking at is called TIPS. Treasury inflation protected securities. I think that's what TIPS stands for. Let's just bring up the real rate. We're taking a look here at the monthly, Katie. And I think where it gets really interesting on the monthly, I think there is two levels that we can look at the real yield. First of all, if we just take a look at it on a candlestick basis, what kind of candlestick do we have here, right? So this is the last day of the month. It looks kind of as if there is a selling tail monthly, isn't it? Perhaps some indication of a top there in terms of that upper shadow. The upper shadow's there. And what we can do is, yeah, we can add a COPOC. It's not going to really help here, Rush. I'll do the COPOC first. The COPOC generally is designed to give one signal only. I have seen others suggest that we look at this in terms of secondary and third signals. I don't agree. It's quite a sort of a hodgepodge when you look at it in terms of yields. It really was designed off of prices, so it's much more informative to do it on IEF. You can also see it's above the 0%, so we're not getting much there with COPOC. But what we can do is if we add the RSI. Remember, I said there's two levels we can look at this at. The first level is perhaps this upper shadow or selling tail on the yield. If we add the RSI, then we get a second level. And what do we see here? Overbought. Okay, get this overbought condition. I just want this rectangle. Get this overbought condition. Let me just fix this up. Okay, that's better. So we've got this overbought condition and we've got the selling tail. So that kind of suggests to me that we're pretty near the apex, right? What if we're pretty near the apex and we've already seen the dollar starting to show signs of sideways movement? I think that gives us some idea of how to analyze the markets going forward. And if the dollar is showing signs of topping, well, that's effectively a safe haven showing signs of topping. Well, if we're seeing signs of safe haven topping, then all of a sudden the risk market becomes exceptionally interesting. So if we just take a look, say, at NASDAQ and SPX. So let's just go through to NASDAQ. So NASDAQ's been hammered over the last few weeks, months even, going all the way back to its high in July. Well, potentially then this could be some sort of wedge, something like this. I don't think I've drawn it particularly well. Let's call it rather, to be more exact here, let's just draw a parallel line down. Yeah, that's better. Let's call it some sort of flag as opposed to wedge. Then if we get a topping formation in the US dollar, if we get a topping formation in the real yield, then possibly some sort of support coming through for NASDAQ. Possibly. The way that we're going to monitor this is we're going to go through to the NASDAQ daily. We want to see it move from the zone 3 into zone 2, from zone 2 into zone 1. That's the way we're going to monitor it. What we can do is we can take a look at the S&P 500 and bring that up. And you can see the S&P 500's actually got quite a vicious downtrend here. It's got this acceleration to the downside from the green trend line to the orange trend line, but again, if we're getting a stabilization in the dollar and a stabilization in the real rates, I think the idea is for us to watch if it goes from zone 3 to zone 2 to zone 1. So the effectively the last few months of 2023, let's see if there's some support that comes in. But we have to be careful here. I don't want to predict, okay? It really depends now on the movement of those real rates. So I want to see the real rates effectively starting to come down with that failure swing. We saw that failure swing in the RSI. So that's what I wanted to show you guys this morning. If there's any questions, just go ahead and type those in. Any questions, go ahead and type those in. Tomorrow we'll have 2 webinars. We'll do the morning market review and we'll do a crypto minute. Yeah, just wanting to look at gold. Yeah, let's just bring up gold. Okay, so I like the way gold actually went above $2,000 per ounce. You can see it's above this 30-week moving average, and that 30-week moving average has turned up. The RSI above 50. I like the fact that it's moved from zone 3 to zone 2 to zone 1. I think that it's gaining a bit on potential spread of geopolitical tensions. And what you can see here, take a look, is that if gold is, if dollar is stabilizing, well, you can see how gold is responding. Okay, it looks as if we're about to get some sort of uptick here, and I think we're going to travel towards this $2,000 per troy ounce. Any other questions there, guys? Any other questions? All right, let's wrap up here. Have a great day. Thanks, James. Have a good day yourself, and we shall chat tomorrow morning. Thanks very much, guys.